Let me ask you something. Have you ever looked at a national housing headline and thought, wait, that doesn't feel like what's happening in my neighborhood? Well, you're not alone because in May 2025, while some markets cooled, others flared up. Prices plateaued, inventory spiked, and sellers got a reality check. On my street alone, 2 houses got sold within a week's time. Welcome to the real story behind Canada's housing market. This isn't some recycled media headline. You're getting the kind of granular, boots on the ground data analysis you can actually use. Whether you're buying, selling, or investing, or maybe just watching for fun or for knowledge. This isn't just about the GTA. This video is actually part of an exclusive collab with top real estate creators across North America. So if you want insider views from Vancouver, Calgary, New York, LA, check the links in the description. These are the pros who know what's really happening in their markets. But right now, let's talk about GTA because that's where I belong. So let's talk about Toronto, Peel, York, and what the May 2025 numbers really mean for your next move. Let's zoom out. Nationally, we saw a flat line in May. The median home price stayed parked at $740,000, identical to April. No month-over-month growth, but year-over-year, that's actually down 2.6%. And that's just the beginning. Transaction volume rose by 13.5% from April. Over 14,650 homes got sold. That sounds great until you zoom out and realize we are still down by 10.5% year over year. In plain terms, last May, more people were buying. New listings have exploded up to 21.5% month over month, and we are hitting over 46,500 listings. This is a huge surge. So inventory is building up fast, then being absorbed. But this is the number that blew my mind. 71% of homes sold below list price. That's right. 7 out of 10 homes are not getting their asking price. And while only 5.7% sold right at asking, only 23% sold above list. That's down from nearly 30% last year. Are you feeling the shift? Yes, this is a pricing sensitive market. It's not a crash, but the leverage has shifted. This isn't 2021. You can't just list and hope. In today's environment, strategy sells. Now, let's go hyper-local and talk about Toronto. In May, the median price ticked up to $947,000, up 2.4% from April. But don't celebrate yet. That's still down 0.4% year over year. So we are hovering, not falling, not rising, just treading water. But here is where it gets spicy. Sales volume is down 19.1% year over year. That's almost 1 in 5 fewer buyers compared to last May. Listings are up by 6.4%. That imbalance creates pressure and opportunity. Now, 29.4% of homes did sell above list, which is better than the national average, but that's down over 10% from last May. That signals fatigue. Buyers are no longer rushing to compete unless the value is obvious. And here is the truth bomb. Dollar volume is down over 20% in Toronto year over year. In plain English, there are fewer deals at lower prices, and buyers are cautious. If your home doesn't look and feel like a value, you are getting ignored. More proof? Okay. Terminations are up 30%. That's sellers pulling their listings after no traction. Reality check part 1. Now, let's look at the two powerhouse suburbs just outside Toronto, Peel and York. And wow, are they telling different stories? Let's find out. Peel region includes Mississauga, Brampton, and Caledon. Median price is $927,000, down 6.3% from last year. Transactions down 19.4%, listings up 18.6%, and a whopping 75.7% homes sold below list. Let that sink in. If you're a buyer in Peel right now, you have leverage. This is a negotiation market. Don't fall in love with the listing. Fall in love with the deal. Now let's talk about York region. York region includes Vaughan, Markham, and Richmond Hill. From the International Luxury Market Report, the median luxury price point is $1.85 million. Buyer's market, but with a sales ratio of just 11%. The sweet spot? Homes priced between 1.7 to 1.9 million. That band is moving, that's it. Sales ratio there is still 20%. Days on the market, from last year it was 12, this year it's 17. York is a tale of two markets. Below $2 million, it's moving. Above that, inventory is stacking. In the 2.5 to 3 million tier, there is a silence. And if you are listing in that luxury bracket, you better have A-grade photography, targeted video, and a clear buyer avatar. The post and pray days are gone. Let's connect the dots across all regions, Toronto, Peel, York, and see what May's numbers really tell us. Trend number 1. The market is overweight on listings. Inventory is rising. New listings are up across the board. 10.4% in Toronto, 17.9% in Peel, and 21.5% nationally. But buyer volume is shrinking. Trend number 2. Buyers are picky, really picky. They are no longer chasing anything that hits the market. If the price is off, if the staging's weak, or if it feels dated, next. And that's why termination volume is spiking. Sellers who don't adapt lose. Trend number 3. The psychology is shifting. Last year, it was act fast or miss out. This year, it's wait, negotiate, and lowball. That doesn't mean deals aren't happening, but the buyer has more control now. This is where smart sellers lean in. As Drew Whitman says in Cashvertising, people don't buy products, they buy solutions to emotionally rooted problems. So sell them the lifestyle, the dream, not just the square footage. Here is what I'm watching this summer. Interest rates. Bank of Canada has said the rate is going to stay at 2.75%. Buyers will have more confidence because the market gets stable. Properties will sell in 800 to 1.2 million price range. So investors may get active again. Builder behavior. Watch the new constructions space in Peel and York. If unsold inventory piles up, expect incentives, rate buy downs, and flash sales, which could shift market comps quickly. Luxury thresholds. We are seeing luxury buyers pull back. Even in Toronto's high-end homes that are above 3 million, they are sitting for longer time. But in that 2.5 million band, well, there is still action. Investor resurgence. Now we see that the rates have flattened. The investors are now creeping back. They're watching cash flow models right now. But the moment the numbers make sense, you will see movement. So, here is your one sentence takeaway for May 2025. The GTA market isn't crashing, it's calibrating, and those who adapt first win first. This is a skill based market now. You need negotiation, positioning, and pricing precision. The gap between smart and average just got wider. If you found value in this video, hit like button, subscribe, and drop a comment. What's your read on the market? Where are you seeing the active market? And remember, this is just one part of the bigger picture. For deep dives into markets across North America, from Vancouver to New York, check the links below. These aren't just random creators. These are the experts you want on your side in 2025. I'm Jyoti Shamnani, and this has been your May market briefing, decoded and delivered. Until next time, price the market smarter.